Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space and also the markets. And that's exactly what we are going to be doing in this video. It's going to be quite a technical video. We're really going to be looking more at where Bitcoin is in relation to the other markets, the stock market, the dollar and risk generally, because I do have some concerns with what the other markets are doing, despite Bitcoin and crypto doing very well. You know, there is this correlation between markets, and perhaps it's a very good thing, actually, certainly from an asset management point of view, that Bitcoin is right now seeing or is not as correlated to the stock market as it has been. You know, they all pull really from the same liquidity, and that is money, right? And this is what I think is important to understand when you're looking at markets. You know, what moves markets? Money, and when there's restraints on that money or there's forward guidance on restraint on that money, the markets typically adjust to it. You know, as a kind of rule of thumb, they typically do quite well under loose monetary conditions, quantitative easing, and they typically don't do as well under quantitative tightening. However, there's an anomaly with this. We've shown you this in regards to the fact that when rates go up, typically the markets actually go up with rates, which is contrary to what most people believe. But right now, Bitcoin is doing very well, along with gold, and altcoins are actually starting to show signs of life. Some of them we think do stand a really good chance of having now bottomed and starting to follow Bitcoin. It's very traditional in regards to cycles, how things are playing out. But I do have some concerns with what we've sort of termed the tide, the broader tide, which is dollar strength and kind of risk off, and how we're seeing stocks, bonds, real estate kind of really pull down and draw down with this, but we're seeing Bitcoin do quite well. You know, is it going to continue to thrash against this? Or is it going to, if it continues, actually run into a little bit of resistance? It's had a great run. You know, I can't endorse people jumping into something once it's done a big move. It's always a little bit risky. That doesn't mean that we think the move is over by any stretch of the imagination. We do think a bull run, and we've been saying this since the start of the year, has arrived, and we really assessed that Bitcoin's downtrend was over after the FTX capitulation. But there is still headwinds that we need to talk about and we need to kind of go over. So that is what we're going to be doing in this video. We are going to really start the video off by looking at the dollar. Right now on Twitter, people are really sort of bragging about the fact that Bitcoin is doing very well despite the US stock market and other stock markets. You know, banks are really getting hit hard because of the bonds. There's this kind of risk on, risk off environment that we've kind of summed up with the dollar going up, risk off. Typically bad for assets, and you can see actually, you know, if we look at what we're terming our basket of risk, this really is the case for all of them. However, recently, risk has continued to get hit, but the dollar, sorry, not the dollar, on a bit of dollar strength and further guidance on higher rates for longer and a tighter monetary policy. But Bitcoin and gold has done quite well. And are they going to continue to do so? You know, this is really what we're going to be talking about. We have sort of speculated that a risk-on period may be ahead of us generally, broadly across all risk, but it's going to really rely on the dollar. Remember, the dollar's been gaining strength since July, at the same point that inflation really started to raise its head. So, you know, it's been bad. You know, whilst that's been happening, using the S&P, risk perfectly correlated and correlated on the sort of bigger time frames as well. You know, if you look at where risk really started to bottom, going up the time frames, then we'll come back down. It was at the, let's just put this on auto, same point as the dollar topped out. So there's a lot riding on the dollar and what it decides to do. In my opinion, interest rates are going to go higher. That's kind of what the yield markets are hinting at. And that typically is going to be a bit of a headwind, because we know that you know, the dollar's acting to it. The dollar really follows the 10-year yield. And of course, it's 10-year yield is doing spectacularly. You know, it's well above 5% at this point, I believe. So that's having a dampening on risk. You'll notice whenever Jerome Powell speaks and reiterates a hawkish stance. Property, which we've got here, I think this is Valkyrie's ETF, typically doesn't do too well. And also things like bonds, which are very rate sensitive markets. So what the dollar does next is really going to be key. I do have some concerns in regards to, we were speculating based on this candle back on at the start of October that maybe you were going to enter a risk on period. And we sort of had that, but the stock market based on earnings has really took a nosedive. You know, if you look at certain earnings, and we'll do them, for example, Alphabet sold off, I think, by 9%. It was a massive candle down. You did have the likes of Microsoft doing well. There were a few others. Meta, I think, actually did very well after the close once their earnings came out on the sort of close market, the futures market, and the pre-market. However, it's a mixed bag, and we need to see, in my opinion, I'd be a lot more comfortable with what Bitcoin and crypto is doing if risk generally was getting a bid. And I think this is the nature of the beast that you're in, is that you can sit in the dollar right now and get 5% for pretty much what's deemed no risk. Certainly if you don't think that the dollar is going to capitulate and fall off the face of the earth. Yeah, we don't. And actually, this de-dollarization, we've never seen so much demand for the dollar during this time period. You know, I do think all fiat systems fail, but we kind of agree with Brent Johnson in regards to how that happens. You know, your smaller currencies will do that first. But we're kind of jumping all over the place. To get back to the topic at hand, it's really about what the dollar does here. And this is strength. And we've actually said, okay, yeah, there might be the dollar coming down, but we need to see that. And right now we're not. You know, we've also said that we don't think you should short the dollar, because when you have something being strong, it's not typically, you don't want to bet against the trend. And Bitcoin and gold are very much rallying and doing quite well since we sort of called for that risk on period against the dollar. However, the stock market isn't. Remember, they all sort of draw from the same. It initially did, and then it went down on earnings. And of course, bonds are just getting absolutely killed. Bonds is in yellow here. Let's put that in red to not confuse, black to not confuse everyone. We need to see a turning of this. And actually, Bill Ackman's tweet, where he essentially said, you know, he's covering his bond shorts. That's a double-edged sword, because, okay, bonds have typically been correlated with a good time for risk and risk on, and them doing well. However, in this environment, it's kind of a recessionary trade because people flock to bonds during a recession as a kind of safety. And of course, real estate continuing to get hit hard. So there's a real downdraft. There's a real strong current against crypto and what it's doing, but it's performing. And actually, we did expect it to do exactly that. You know, we have been tracking Bitcoin against the SPY. We said it broke out. We said, actually, this is textbook stage analysis here in regards to this being now a stage 2 breakout, double retest. And then, you know, you see that further continuation. If we look at Bitcoin against the NASDAQ, it's doing a very similar thing. Just to put this on auto and not confuse everyone. And also against gold, it's actually starting to raise its head. And against bonds and other things, it's doing quite well. But will this continue? And you've got to be very careful. You know, I was doing a meeting with my patrons yesterday when we were looking at a number of things and where Bitcoin maybe could get to at the end of the year. Very hard to tell, but we could see that 40K plus. You're running into a tough area. And actually, we have also looked at Bitcoin's CME, or the CME futures for Bitcoin, and you have now closed, if we use Bitcoin futures, this sort of gap pretty perfectly, and now you're having a bit of a rest. So what it does next is going to be interesting. You know, you could even see a run back to sort of 30K to go and find a bit of support and then continue. It's not going to be a straightforward ride, and you do have institutions that are looking to capitalize on this, and they will do that at the expense of retail. So really a word of warning, you are seeing a lot of altcoins doing exceptionally well. You know, Solana was one of them that we were really highlighting about its potential turning. Let's take all these scribbles that we were aggressively doing last night off. You know, we did look at turning for Solana, and it's gone on to do very well. Unfortunately, I actually got capitulated out of Solana here. I had to sort of limit my risk only for it to do this, but we're very much right on the trade idea. There's lots of other cryptos that seem to be picking their heads up. I'll take the draws off here that we like. But we'll see. You know, you have got this really strong current to contend with. Banks getting killed with bonds. It's an interesting and tricky environment. And I'm really hopeful that we start to see a real pivoting, you know, a dampening on Bitcoin dominance. And this is only for myself because we're more in altcoins than we are Bitcoin. You know, I'm really hoping that we see this kind of fall in. We'll pop an RSI on here of Bitcoin dominance. and a kind of period of, although, you know, it's Bitcoin dominance has been very strong. And of course, this is with all the ETF news and stuff. But to go back to the others chart, you know, you are going to have a real period for altcoins, but I feel as if it's going to be accompanied with general risk on. And right now, again, I'd be very cautious on Bitcoin. We're bulls. We assess that the bull market's here. We think it's already started. But at the same time, I'm very cautious. You know, I'm not running into, you know, finish off my bags just yet. And you want to find out what my bags are, you know, where I've bought, what I've bought, please do consider checking out the Patreon because you'll get my full portfolio. We've got this smaller head and shoulders target. You do this thing called sort of, you'll notice it's kind of like, you know, what you used to draw on the whiteboards as a kid when you were at school. This is how markets move, you know, and they kind of go like that. And then there'll be a bigger, you know, previous price action here that will cause a broader head and shoulders. And it works in both the up and the downside. So this is really what we're looking for with others. This is really everything excluding Bitcoin and stable coins and Ethereum. You do have this smaller head and shoulders target that's going to take you to pretty good resistance, which is potentially going to set up a broader head and shoulders. And this is when we're really going to get that move for altcoins. That's not here yet. We need this to kind of at least get to here, then pull back, and then we'll see what's happened. So there's going to be a little bit of turbulence to get to that. My main sort of topic for this video really is just to be cautious. We're not calling for a new bear. We're just calling for a turbulent ride, certainly with risk generally doing what it's doing. You know, we've had lots of company earnings coming out. You know, Meta on the close literally had a 10% rally in seconds. Very jumpy market as well, which is maybe there's a bit of cause for concern there. You know, I'm just cautious right now, to be quite honest with you guys. This isn't a bear call. I'm just being honest with what we're seeing. And of course, if you look at things like Meta, which we think is going to do extremely well, you know, this is brutal, to be quite honest. And we'll see. The one thing that I would say is be very cautious with gap closes, because this is likely going to get closed, in my opinion. You know, they on the stock market pretty much always get closed when you get these sort of jumps. So are we going to get that risk on period? We are. Let's take a look here. Stock hurts. Okay. Yeah. Are we going to get that risk on period? It's going to depend on the dollar. The dollar's got a roll for me, and we've got to see risk generally get a bid. And with bonds, the question I can't help but ask is, why do they get a bid? Is it because the shit hits the fan and the Fed need to step in like they did back with Silicon Valley Bank? Potentially. We played a clip of Larry Fink yesterday actually talking about how he envisions the market playing out, which aligns with our thoughts on rates and generally how we think things are going to go. But there's a lot to watch out for, guys. And we'll hopefully try and keep you on the right side of that. I did highlight this. If you guys aren't already following me on Twitter, please do go and check out my Twitter. I did highlight that, you know, despite everyone being over the moon about this, it's generally not a good sign for the markets that risk generally is getting hit. We mentioned Bill Ackman's tweet, and also the fact that the Dixie needs to roll. You know, there's I think personally real risk. To talk about more risk, not to put a damper on anything, because we think you're off to the races here. You also have the yield curve, and I'd have definitely drawn all over this, that's starting to invert. We know when it's uninverted, that's actually typically when the recession hits and a crash occurs. So lots of things we're watching. We're not just bullish for the sake of being bullish at the end of the day, guys. We're bullish because we've done the homework technically. We've also fundamentally aligned that. And when something walks and quacks like a duck, it's a duck. It's when we've seen the stock market technically and said it's going higher from the start of the year. You know, many of our stocks actually perfectly made their target. And you could have an AI narrative that fundamentally aligns with that. You know, Bitcoin looked good. Gold looked good where it was at. Altcoins now starting to warm up. You know, that's kind of the broad overview, but there's going to be chop in that. It's not going to be a straightforward ride. And I do believe that institutions are going to play tricks on you here and there. So that's really all we got for you guys. A bit of a word of warning. Watch out for, we need to see risk turn. And it's not doing that yet. We're kind of wrong on the idea back when we were looking at the dollar turning of risk generally having a good time. So far, it's only Bitcoin and gold that are doing well. But actually, the uncorrelation there's a good thing, certainly from an asset management point of view. You know, everyone touts this term alpha, but nobody really understands what that means. The term alpha basically comes from portfolio managers that diversify in assets that are uncorrelated. Because if you do that, you lower your risk, you lower your tail risk, and thus, you know, you also, not only do you lower your risk, you can actually increase your performance. And that's what alpha is, you know, finding those assets. And I think Bitcoin is very much acting like that. We are on the cusp of Bitcoin becoming recognized as a global asset, and everything that's going to follow with that. And then eventually you'll have altcoin ETFs. You know, this is where we're going, but there's going to be a choppy ride to get to that. So that's really all I've got for you guys. Just a real analysis of the markets right now, things we're looking at, reiterating the plan. And yeah, that's all we've got for you guys. Thanks a lot for watching. If you enjoyed the content, like, appreciate it. So as a comment, don't forget to go and check me out on Twitter. Go and check allincrypto.com out. And yeah, a like and a comment's appreciated. Thanks for watching. See you in the next.